Hello Internet, this is Dave Adams. Today I'm going to be talking about Apple, a company that is on everybody's mind this week. But I'm not necessarily going to be talking about just the phone and the sex appeal and the cost. Everyone else can talk about that. As usual, I want to talk about the stock, the company, and the futures of it. Before we get into that, I really urge you to subscribe, like, comment. I'm a small pond. There's not a lot of fish here, so anybody that jumps in is going to make a huge splash. Be one of those people. So before we really dive into any company, we should understand what that company is. Apple seems like such an obvious one, but because it's so massive, we should really understand some of its intricacies. So I've broken this down into just software, services, and accessories. And then on the bottom you can see the various platforms that support Apple's engine. That engine is running with some really great levers right now. 17.9 is the PE as of today. That's slightly below the tech average, which as a tech leader is an excellent place to be. The price to earnings growth, we're looking at a spot on 1. That is great, exactly where we would like to see that as well. Price to book floats a little bit higher than the tech average, but this is the best tech company out there. So for it to only be 6.2 times above its actual book value, to me seems pretty friendly. But obviously we can debate that down in the comments. And then on the bottom, return on equity, assets, and capital, all of which are outperforming their peers. Not much to say other than well done, great job yet again. Here's an outlook on revenues and profits since 2011 through now, the mid of 2017. You can see a slight level off there in 2013 and 14 as a result of leadership deciding to take a new position on debt. So for those that don't know, Steve Jobs passed away. The new executive team was taken over by Tim Cook, and Tim Cook had more of a willingness to use debt as a leverage tool to expand the company's influence. And we'll look on the next slide to maybe dive into this a bit more. So here is what that debt looks like with the profits themselves above it, or I should say net worth above it. And you can see that debt quickly creeping in, something that for the longest time Apple refused to take part in. These expenditures will likely be what continues to propel this tech stock forward. And it adds intrinsic value to the company itself by distancing itself from competitors and specific suppliers. Part of that expenditure also goes to expanding your presence internationally. If you look at just 2001, there were 8 Apple stores worldwide, all of which were in the United States. If we fast forward 14 years to the end of this graph, absolutely epic. 483 retail stores, about 40% of those are international. And as you can see where the trajectory is headed, it's leveling off in the US and it's growing overseas. So to me, that's a great sign for Apple, who has one of the smaller market shares in terms of devices out in the world. This is just nothing but upward mobility for them. In fact, to speak a little bit about market cap and how do they fall versus other companies that try to compete in little spots that they compete. Well, here's the companies that come up on Guru Focus when you look at the competition. Companies like iRobot, GoPro, Universal Electronics, Kodak's in there, Skull Candy. All of these companies make some sort of software or service or an accessory that's supposed to better your life, right? And as we can see, their market caps are relatively where they are, and their net margins are disrespectful. They're not all that great. Why? Because as soon as I put Apple into this chart, it absolutely sets everybody to the kids' table. All of that competition we just looked at, nice and spread out, is now thrown to the left side of this graph. The market cap of Apple does that to the competition. It makes them pretty much useless. So whether or not that's leverage from debts, that's the ability, whatever you want to acclaim that to, this shows that there's not really many people out there on the horizon looking to come after Apple's castle. So what this means intrinsically is that the stock is currently valued around 158, I believe, when I recorded this. We see 160 on the screen. Future cash value is estimated at roughly 185. This gives us a nice overlay of around 14%. In terms of dividends, they were at 1.5% in the middle of the day today, 27% payout ratio, absolutely covering it comfortably. These dividends are expected to trickle up slowly, and yet because of the massive profit coming into this company, the payout ratio will likely continue to decline. So what exactly is the catch, right? That's something we like to end the show with and really understand both sides of the coin. Apple is in many ways too big to fail, but also is susceptible to finding it more increasingly difficult to achieve percentage growth gains, right? The bigger you get, the harder it is to keep growing at that same rate. Another thing to point out is just remembering Samsung and how third-party pieces ruined their name with burning batteries and washing machines and all the et cetera, right? So I like that Apple controls this to the extreme. But the world's not a perfect place, and a poorly timed setback or an effect could, just like anyone, affect this stock harshly. We'll look into that actually in the next slide. We'll dive a bit deeper. But I do want to say that despite the reasonable price and favorable PE, there are many other stocks that, just to be honest, will likely provide larger gains over the next year, albeit these will come with much more risk and much larger swings. Apple is a safe bet for those who cannot stomach that kind of volatility. And to go a bit further, it's an excellent first stock for those that are learning the ropes. So I said I wanted to dive a little bit deeper, and it was when I was talking Samsung and just really I want to point out that an iPhone with Apple's name is not wholly controlled by Apple. Who makes what? Where is it made? And should I care as an investor is always a series of questions you should ask. This is an older phone referenced here, but the mindset is still the same. And Apple is trying to get more and more away from this. But you can see Qualcomm's name comes up several times, and if anybody knows anything about Apple, you know that Qualcomm and Apple are not good friends. You'll also see on there chassis made from China, rare minerals coming from California and China, A9 processors that are coming from Samsung, a direct rival, and then RAM, which has been a very touchy subject, has been in short supply and thus caused some cost to go up. So a recap, this stock is popular, it's huge, it's successful. This is a solid candidate for being a first stock for any new investor, or for what it's worth, a pillar in the portfolio of those more experienced. This stock pays a reasonable dividend, comfortably at that, with room to expand the company and the dividend without any constraints in sight. Unique access to customer data allows them specific marketing capabilities for users, especially those with Apple homes. And then to kind of double on that, rumors of expansion into media come with both positive and negative possibilities. But one of the positive possibilities is being able to come up with shows and media directly for the consumers that you know best. High product margins will allow them to continue focusing on product capabilities and innovating future technologies. And of course, one of my favorites really, their smart payment plans, Apple Pay, makes an increasingly expensive phone just that much easier to buy. And with the higher affluence of the customer base that Apple tends to support, this evidence just continues to trend towards their customers will keep up with the Joneses despite these rising prices, which as an investor, if they're going to buy it no matter the price, you got to love that, right? So Apple as a once-over, I think, is an excellent part of anybody's portfolio. It's part of my portfolio here at Vicarious Ventures. And if you have any questions about this company, or maybe want to know about another company, or maybe just want to subscribe and make me feel like a hero, absolutely do that on the buttons below. Thank you so much for your time. I appreciate it, and I hope to talk to you soon.